Traders, what's up? Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk, and lots going on in the world of FX and beyond. So let's dive in. We are going to start today with a chart of TLT. It's basically just the long bond ETF. So the big story, right? Macro story in recent months has been the surge in interest rates, and that is denoted by TLT, by bonds going down, right? So bonds and rates move inverse to each other. If you're not familiar with this, so going down means interest rates are going up. I will show a chart of interest rates here in a little bit. The long bond rate, and you'll see that we're also at a resistance level there. So we've been focused on this really the last, I guess, I don't know, 3 or 4 trading days for a turn, okay? That means a turn higher in bonds, a turn lower in rates. And the main reason why, you can see from this chart, all right, is simply that we are at what I would deem pretty big support, or just a big level, right, for support. So you can see here this parallel, right? We just have a channel, and the parallel back here, 2013, big low, right? 2018, big low. Here we are in 2022. Also, we had that low there from February of 2019, thinking big low, right? So you zoom in, look at a daily chart. You can see here, you've got an island reversal type of deal going on here. And yeah, so far so good in terms of thinking that we're going to get some sort of a reaction off of this, which we have. But yeah, I don't know, from here, look, let's just, sake of argument's sake, let's say we do get a decent low. Frankly, the big resistance is probably going to be like up here, like this neckline, let's call it, right? So yeah, it's a pretty big move. Look, I'm not predicting that's going to happen. I'm just saying if we do get some reversal evidence, which we are getting right now, and we hold up, we start to work higher in the coming days, weeks, and whatnot, it's kind of where I'd be thinking, right? So said I would look at a chart of 30-year yield, US, and let's go there. Okay, so here's the weekly chart of that, and this is going back like 40 years or so, just about. And you can see that the channel here and the parallels, associated parallels, pretty darn good in terms of nailing pivots. In fact, I've been writing about this each time we've gotten to one of these levels that, probably going to get a move in the other direction. And we got one here, March 2021, back November, early December. It's really when this next big leg started. And now we're at what I would call, again, big resistance, right? So let's kind of think lower here. That's where my head's at. So thinking lower in bonds, and this goes actually, what I'm going to talk about here, we had some questions on the YouTube video, and thank you, or on the YouTube page, and thank you for that. We have a question here: will DXY drive higher with interest rate hikes for the next year or two? It's a great question. And to be sure, as rates have just absolutely surged here in the US, and they have been going higher pretty much everywhere. However, they have gone higher, or the differentials have gone higher, and that's really where you want to look, is the differentials. First of all, no one knows if the dollar's going to go higher, if interest rates are going to go higher. That's probably a bit played out in terms of the rate move. And to be sure, there are times as well when rates go higher here and the dollar does not follow it. And really, again, it's the differential. So, like for example, I'm gonna pull up. Let's pull up here. Let's just pull up the U.S. 10-year against the Japanese 10-year, right? So here's U.S. Go to a daily chart. Here's U.S. 10-year, okay, and Japanese 10-year, right? So yes, we have absolutely ripped. If I overlay like a chart of dollar yen here, oops, I should do this a bit better. Hold on here, dollar yen, new price scale. There we go. Okay, so as you can see, for the most part, yes, they do follow. But again, this differential, so like we're seeing dollar yen reverse lower today, and we'll get to that, of course. We're also seeing Japanese or U.S. Japanese 10-year spread reverse lower here as well, right? So these in and of themselves are kind of their own markets. Yeah, so as to your question, you know, will DXY drive higher with interest rate hikes the next year or two? It could be played out, you know, that narrative. That's certainly, you know, not a rare view anymore, that rates are going higher. So, you know, we could revert a little bit here, and that's kind of what I'm thinking, is that we do, in fact, revert a bit with these moves higher in rates, and the dollar in particular against the yen. So don't forget, we've got, if you go to Twitter, my Twitter page is at Jamie Saettele, just my name, but I've got the link on there to our prop trading program, scandinavianmarkets.com/getfunded. Again, check that out. Okay, this is going to be, you know, we've had, excuse me, we've had, you know, a lot of questions here. We've, you know, kind of revamped the program. So come check it out. You can read all about it. Essentially, you know, you can get funded with up to $2 million. You can get funded with far less, of course. There's an assessment fee. Once you pass that, you do get funded. There's no time constraints or time limits like other programs in which you have to make a certain amount of time. Trading does not work like that, right? Everyone's different. There are drawdown limits, of course, and there are targets that you do need to hit, but you don't have to hit it within a certain amount of time. Okay, if it takes you 6 months, fine. It takes you a year, fine. If it takes you a month, great, right? But there is no time limit like other programs have. So come check that out.